Hello everyone. So recently we have made the financial model of Hero MotoCorp and we forecasted the revenue and expenses for financial year 26 to financial year 30. So recently Hero MotoCorp has announced their results for financial year 26 and quarter 4 of financial year 26. So I thought we should update our financial model to in a precise way so that we could reach a accurate valuation towards the estimation of a better valuation. So let's see. And we know that building a financial model is not a one-time process. It's a continuous process which you have to update it every time when you get a new information to make your model more precise and accurate. So yeah, we will now update our information about the new update about the company's results. So firstly, we have the quarter financial results of the Hero MotoCorp. So let's observe the number of two-wheelers sold in lakhs is 64.69 lakhs, which is the number. So what were our assumptions which we took here? That was 62 lakh 550,000. So this was our assumption. So we assumed conservatively. So now we should change it to 9% around 9 point. So yeah, we reached around same figure 64.69. That's approximate. And if we see something about the capacity of the company, management have given us a guidance about the improving capacity in some of the products of the company, but they did not mention where it will be. So we will update this when we'll get the annual report of the company. So yeah, now we will go and see what were the industry two-wheeler sales. So we will get this data from SIAM website, that is Society of Indian Automobile Manufacturers. So we have here two-wheeler posted the highest ever Q4 57.73 lakh units and growth was 26% as compared to Q4 year-on-year growth they are saying. And we want financial year 25-26. So two-wheeler segment posted highest ever sales of 22.17 crore units. Okay. And that was a 10.7% of growth. Okay. Let's update it over here. 10.70% of growth. So we got it. Yeah, 2 crore 17 lakh of units sold. So here we get the 29% of market share in FY26. That is reduced from 30.80%. So the revenue which we got here is 46,841 crores, which is 14.46% of growth. So let's compare it with the what 46,830 is here. So yeah, other income we have to add over here. So what was the other 401041 that we only calculated here the okay that will add over here. Wait, 1041. Okay. So here we'll get the accurate figure of the total revenue. Okay. So yeah, now we have here the realized revenue per unit. This comes out to be around 4% because in their con call, management precisely said that they have increased their price from 3 to 4%. And if we go towards the cost is aggregate increase of cost over the year is around 7%. Okay, so we come at the 31,871 of cost of goods sold. That is total cost of goods sold we have here is 30,844 plus 796. So approx we get the same figure around that. And now if we go to the gross margin, we have the gross margin of 31.73%, which is better. So SG&A expense remains same, and employee benefit expense, let's see what happened to it. Employee benefit expense has 2710. It has been decreased what we have uh, forecasted. So it became 5.80%. Okay. Now the finance cost, let's see what is the finance cost over here. 22.76. Yeah, 22.76. It decreased drastically. So it's now 0.049% only. What about depreciation? Let's see. We have depreciation cost as 798 crore. Let's update it over here. 798 crore. That's what percentage of total sales. Let's see. That's around 1.71% and decrease of 3% from last year. Okay. Other expenses. Let's see what are the other expenses which company incur. 5,685 crores. 5,685 crores. That's more or less 12% around. And 703% of 703 1703 is the tax paid. Yeah, we have updated that tax paid. I think yeah, we have updated the tax paid. So total profit we have here is 5268. What the figure we get it? Let's see. What is the figure? Net profit 5013. So there are some, we are very close to that figure. There might be some ups and downs over here. We have to update that. Okay, I'll update over that. And but we got it approximately. Okay, 23. What? Let's see what is the cost, total cost. 30844796. 30796. 31640. This is lower than this. Yeah, it is coming higher. So we have to reduce some cost which it's incurred over here. So we'll get the same figure almost. Yes, 6.8. 576. What was there? 643 and 6.0. 6.4. Okay, this is now we are getting 220. Okay, this is the best part we got it over here. So 11% of net profit margin growth and 11% of net profit margin we got over here. So EBITDA is around 17%, which around 7,745, and EBIT operating margin 14.88%, which is a little bit reduced from last year. Now we have to do the yeah. Now we will see the what there is the capex which is done by the company, which is 111112 crores. we got this data from the financial statements of the company. Inventory, we have to update it over here. What was the inventory in FY26? Let's see. Inventory's figure is FY26 1858. Let's update it over here. 1858. And receivables, what are the receivables over here? Trade receivable 2593. 2593. And payables, liability sections, total 7474 plus 44. 7474 plus 44. 7500. Okay, so we got training working capital also here, and that's already connected over there. So let's see what is the effect which we got on the valuation, DCF valuation. So firstly, in first case, which is a base case, here we are getting the value of 4,105 rupees per share. In best case, we are getting 4,490 rupees per share, and in worst case, we are getting 2,873 rupees per share of value. So this were the assumptions, and we change whatever assumptions which we projected in financial year 26 with the real values which the financial results management has given. So in this way, you have to update your financial model in the most recent updated data to get the precise valuation. So thank you for watching the video, and I'll come with the more exciting videos in later on. Thank you so much for watching.